The Indian stock market experienced a dramatic plunge today, sending shockwaves through the investor community. This sudden downturn is largely attributed to the outcome of the Lok Sabha elections, the results of which have begun to unfold. As the political landscape shifts, investors are grappling with uncertainty, leading to a wave of sell-offs. The market, known for its sensitivity to political developments, is reacting to the potential implications of the election results on economic policies and overall stability. The Lok Sabha elections, being a pivotal event in India's political calendar, always have the potential to influence market sentiment. This year, the stakes are even higher, as the outcome is expected to have far-reaching consequences for the country's economic trajectory. With the initial election trends revealing a close contest, investors are adopting a cautious approach, leading to heightened volatility in the market. The uncertainty surrounding the formation of the new government and its subsequent policies has added fuel to the fire, prompting investors to re-evaluate their investment strategies. The Indian stock market, which had been on an upward trajectory in recent months, is now facing a sudden reversal of fortune. The benchmark indices, including the Nifty 50 and the BSE Sensex, have witnessed a sharp decline, reflecting the prevailing nervousness among investors. The banking sector, considered a barometer of the economy, has been particularly hard hit, with the Bank Nifty index plummeting significantly. The rupee has also weakened against the US dollar, further adding to the gloomy sentiment in the market. The current market turmoil underscores the intricate link between politics and economics in India. The outcome of the Lok Sabha elections has the power to shape the country's economic policies, investor confidence, and overall market sentiment. As the election results continue to pour in, the market is expected to remain volatile, with investors closely watching the developments and adjusting their portfolios accordingly. The coming days will be crucial in determining the future direction of the Indian stock market as the nation awaits the formation of a new government and clarity on its economic agenda. Early trends emerging from the Lok Sabha election results have sent ripples of anxiety through the Indian stock market. As initial results pointed towards a close contest, key market indices like the Nifty 50 and BSE Sensex went into a tailspin. The Nifty 50, a benchmark for the performance of 50 prominent companies listed on the National Stock Exchange of India, experienced a sharp decline, mirroring the uncertainty gripping the nation. This index, often considered a pulse of the Indian stock market, reflected the widespread apprehension among investors. The BSE Sensex, another key indicator of the market's health, wasn't spared either. Comprising 30 well-established companies listed on the Bombay Stock Exchange, the Sensex witnessed a significant drop, further underscoring the market's bearish turn. The banking sector, highly sensitive to political and economic shifts, felt the heat, with the Bank Nifty index mirroring the downward trend. This index, tracking the performance of leading banking stocks, plunged as investors reacted to the unfolding political drama. The market's freefall can be attributed to the uncertainty surrounding the election results and their potential impact on economic policies. A close contest translates to a lack of clarity on which political party will form the government and what their economic agenda might be. This ambiguity makes investors nervous, prompting them to sell off their holdings and leading to a decline in stock prices. The market thrives on predictability, and the current political climate in India, marred by the unpredictability of the election results, has created an atmosphere of fear and uncertainty. The early trends, while not painting the complete picture, have certainly spooked the market. The sudden downturn serves as a stark reminder of the interconnectedness of politics and economics. As the day progresses and more results are declared, the market is likely to remain volatile, reacting to every twist and turn in the election narrative. The performance of key indices like the Nifty 50, BSE Sensex, and Bank Nifty will continue to be a barometer of investor sentiment, reflecting their confidence or lack thereof in the future of the Indian economy under a new government. Market experts and seasoned investors are closely observing the unfolding political drama and its impact on the stock market. Their analysis provides crucial insights into the current market mood and helps navigate the turbulent waters of stock market investments. Most experts agree that the sudden downturn is a knee-jerk reaction to the uncertainty surrounding the Lok Sabha election results. They emphasize that the market dislikes uncertainty, and the close contest has amplified this aversion, leading to a sell-off. veteran investors urge composure and long-term vision amidst the temporary chaos. They remind market participants that the Indian economy's fundamentals remain strong, and this volatility is likely to be transient. They advise against panic selling, emphasizing that hasty decisions driven by fear can erode long-term gains. Instead, they recommend a wait-and-watch approach, allowing the political dust to settle before making any significant investment decisions. The current market scenario has brought to light the importance of risk management strategies like strict stop-loss. This strategy involves selling a stock when it reaches a certain predetermined price, limiting potential losses. Experts believe that implementing such risk mitigation techniques can help investors safeguard their portfolios during volatile periods like the present. They also underscore the significance of diversification, spreading investments across different asset classes to mitigate risks associated with putting all eggs in one basket. The India VIX, a measure of market volatility, has spiked sharply, reflecting the heightened anxiety among investors. This index, often referred to as the fear gauge, indicates the market's expectation of volatility in the near term. Experts are closely monitoring the India VIX as it provides valuable insights into the market's perception of risk. A high VIX usually suggests heightened fear and uncertainty, while a lower VIX indicates relative calmness. Understanding and tracking such market indicators can be beneficial for investors in making informed decisions. As India awaits the final election results and the formation of a new government, the stock market is likely to remain volatile in the coming days. Navigating this uncertain terrain requires a combination of caution, patience, and a deep understanding of the evolving political and economic landscape. Investors should prioritize a long-term perspective, focusing on the inherent strength of the Indian economy rather than short-term market fluctuations. Panic selling should be avoided as it can result in missed opportunities when the market rebounds. The post-election phase will be crucial in determining the market's trajectory. The new government's economic policies, their approach towards foreign investment, and their stance on key sectors will significantly influence investor sentiment. A stable government with a clear economic vision is likely to boost market confidence, while a fragmented mandate or policy uncertainty could prolong the volatility. Investors should closely follow policy announcements, expert analyses, and market trends to make informed investment decisions. The current situation presents both challenges and opportunities for investors. While the volatility might deter some, it also creates opportunities for savvy investors to buy fundamentally strong stocks at attractive valuations. This period underscores the importance of thorough research, due diligence, and seeking advice from financial advisors. Understanding one's risk appetite, investing in companies with solid fundamentals, and maintaining a diversified portfolio remain key to navigating the post-election market landscape. The Indian stock market, despite its current turmoil, has always demonstrated resilience and the ability to bounce back. The long-term growth potential of the Indian economy remains intact, driven by favorable demographics, a growing middle class, and increasing urbanization. While the short-term outlook might seem uncertain, the long-term prospects for the Indian stock market remain positive. By staying informed, maintaining a long-term perspective, and making calculated decisions, investors can weather the current storm and capitalize on the opportunities that lie ahead.